Well, today we're taking a deep dive into Chevron's Q3 2024 earnings call.
Yeah, it's an interesting one for sure.
Definitely. So we've got the transcript here, obviously, and the latest stock information. Trying to get a sense of, how the market's reacting to their performance.
Yeah, and at first glance, it feels like a bit of a muted reaction considering some of the achievements they're reporting.
Right, because you see record cash, return to shareholders, you see strong performance in the Permian, exceeding cost synergy guidance. All sounds pretty good, right?
Mm-hmm. Definitely positive on the surface.
But then you look at the stock price, closing at 153.07 today, a gain of 2.86%, but still below that 52-week high. So
yeah, there's this disconnect, right? Like the market's not fully buying to the good news.
it feels like that delayed Tengizchevroil project, the TCO they keep mentioning,
Right.
and that uncertainty around the Hess merger. Those things are weighing things down.
I think you're spot on. The market, it wants more certainty on those fronts, which is understandable.
Yeah, absolutely. So let's unpack this TCO situation a bit. Chevron did achieve some, I guess you could call them milestones this quarter.
Yeah, some big ones, actually. All 4 pressure boost facilities are now operational, which has led to, get this, the highest daily production they've ever seen in that field's history.
So what's the but? There's always a but, right?
Well, the Future Growth Project startup is it's still delayed. They're now saying Q1 2025.
Oh, wow.
Yeah, so they say commissioning is progressing well, but, investors, they get a bit skittish when they hear delays, especially on a project of this scale, the risk of cost overruns and all that.
We are talking billions of dollars here.
Yeah.
Any hiccup, that's going to have a ripple effect for sure.
Exactly. And let's not forget, this project has already seen its share of cost increases and delays, so the market's like, okay, show me you've got this under control, Chevron.
Right, prove it. Okay, well, let's move on to the Permian then. Chevron expects to hit that 1 million barrels per day production target next year, which is ambitious, but then they're planning to, well, it's an interesting move.
Yeah, they actually plan to decrease capital spending in the Permian after that.
So they're going to hit their goal and then pull back a bit.
It seems so. This signals a pretty big shift from prioritizing growth to maximizing free cash flow. Milk that Permian cash cow.
Interesting. So what does that mean for their overall financial picture then? What are they going to do with all that extra cash?
Well, that's the big question, isn't it? It definitely gives them more flexibility, maybe more for shareholders through dividends and buybacks, maybe allocate it to other strategic priorities.
Okay, well, speaking of strategic priorities, there's that decision to sell their Canadian assets kind of came out of left field.
Mm-hmm. Including their stake in that Athabasca oil sands project, the AOSP.
Yeah, and this seems odd, right? Because they've been emphasizing long cycle, high quality resources lately, especially that a Hess merger in the works.
Right, so why sell off something that, on the surface, aligns with that strategy?
Exactly. So what's the thinking there?
I think, they see greater value in divesting now, maybe favorable market conditions for Canadian energy producers right now, take advantage of that seller's market.
Oh, so like a strategic move to get a good deal while they can lock in those profits.
Could be. Plus, it frees up capital for other things, share buybacks, debt reduction, who knows?
Playing the long game, huh?
Yeah.
Okay, well, they're also aiming for big cost reductions, like $2 to $3 billion by 2026.
Ambitious, yeah, but they've laid out how they plan to do it.
Okay, break it down for me.
Portfolio actions, like those Canadian sales we talked about,
Yeah.
That's one part. Then they're really leaning into tech to boost productivity, drones, robotics, things like that.
So streamline, get more efficient.
Exactly. Plus, they're expanding the use of those global capability centers, centralizing work, standardizing stuff. That all helps too.
Okay, so between that, the divestitures, this focus on free cash flow,
Yeah.
it does seem like they're all about optimizing that financial performance, squeezing every bit of value they can.
Mm-hmm. Absolutely. But let's not forget the bigger picture, right? The global LNG market, for example, that's a whole other beast they have to navigate.
Oh, for sure. So how's Chevron approaching that? Because it is a bit of a mess out there, delays on new LNG units, concerns about future supply and demand, the whole 9 yards.
Yeah, and their strategy seems to be all about minimizing risk. Lots of emphasis on those long-term contracts, locking in buyers and prices, shielding themselves from the volatility in the spot market.
Makes sense in this environment, right?
Yeah, I mean, right now, over 80% of their LNG portfolio is tied up in these long-term deals, mostly with buyers in North Asia. So they're prioritizing stability over chasing those quick wins.
Makes sense. Okay, one last thing before we move on. Got to talk about the Gulf of Mexico. It's not the oil and gas hotspot it used to be, but it seems like new tech is breathing some life back into it.
It is, and Chevron's Anchor project is a great example. They're using cutting-edge tech to extract oil and gas at super high pressures, the kind we couldn't even touch before.
Remind me, how high are we talking here?
Think of an elephant standing on a quarter.
Whoa, okay, that's intense.
And this isn't just a one-off. Chevron has said that 20% of their future exploration portfolio needs that ultra-high pressure capability. So
they're opening up a whole new world of resource opportunities in the Gulf.
right. Plus, they're using tech to squeeze more value from their existing Gulf infrastructure, developing those smaller discoveries, tying them back to existing facilities, being smart about it.
Smart indeed. Okay, so it's clear they're pulling out all the stops to optimize everything in the Gulf.
It's impressive. And it's not just the Gulf. Their turnaround performance overall has been stellar this year, both upstream and downstream. Completing these complex maintenance events ahead of schedule, under budget, that translates to more uptime, lower costs. It all adds up.
That's huge. What's the secret sauce? How are they achieving such consistent results?
Well, they've standardized their approach to turnarounds using digital tools, benchmarking to drive efficiency. And they're really big on collaboration, knowledge sharing, making sure lessons learned in one area benefit everyone.
Okay, so it's a culture of continuous improvement, always looking for ways to do it better next time.
Exactly. Which is essential in any industrial company, but especially in energy right now. But, we can't ignore the external factors either, like the regulatory environment in California. They've still got those 2 refineries there.
Right, and that's been a bit of a headache, hasn't it? We just saw another refinery closure announced there, and Chevron's CEO has been pretty vocal about California's policies, calling them ill-conceived.
Yeah.
And blaming them for rising gasoline prices.
Yeah, it's a tough spot. They're evaluating their options, but hesitant to invest more with all that uncertainty. And rightfully so.
For sure. So it's a wait-and-see approach, I guess, see how things shake out before making any big moves.
Seems like it. And of course, there's that looming Hess merger. All the uncertainty surrounding that is definitely playing a role in how the market's reacting right now.
Yeah, can't forget about that.
Right.
Even if the arbitration goes their way, integrating 2 giants like that, that's a huge undertaking.
Absolutely. Cultures, systems, operations, all that needs to be merged smoothly. That alone will take time and effort. The market will be watching closely to see how they handle it.
Okay, so we've covered a lot. The TCO project, the Permian, those Canadian asset sales, the cost reduction efforts, the whole LNG market situation, the Gulf of Mexico revitalization, their turnaround performance, the California dilemma, and of course that pending Hess merger. That's a lot to digest.
It is. And we're not done yet. There's still more to unpack with Chevron's Q3 2024 earnings. We haven't even touched on their approach to shareholder returns, their CapEx strategy, or what they're saying about the chemicals market. Lots more to discuss.
So stay with us as we continue this deep dive.
Before we move on from that, I think it's worth circling back to something we talked about earlier. That idea of Chevron using all this extra cash they're generating to reward shareholders, because they did return a record amount of cash to shareholders this quarter. I'm kind of curious, what's driving that, and is it, sustainable?
Yeah, good point. Is this going to be the new normal, or are they being a bit too generous considering how oil prices have been jumping around lately?
I think it's a combination of factors. Strong earnings, obviously disciplined capital allocation, and they've been very clear about their commitment to returning that excess cash to investors. They repurchased a record $4.7 billion worth of shares this quarter, and they reaffirmed that $17.5 billion annual share buyback program.
Wow. Yeah, that's a lot of money going back to shareholders. But with oil prices being so unpredictable, are they being too aggressive? I mean, what happens if prices take a nosedive?
It's a valid concern, but Chevron has always stressed this through-cycle approach to shareholder returns, so they're not just thinking short-term. They've kept a pretty conservative financial stance, their balance sheet's solid, even when things get rough in the market. That gives them the flexibility to keep those buybacks going, even if oil prices dip.
So they're not assuming oil prices are going to stay high forever, more of a long-term view.
Exactly, trying to find that balance, rewarding shareholders today while still investing for the future and keeping that strong financial foundation.
And speaking of investing for the future, let's talk CapEx, capital expenditures. Chevron's been on this multi-year journey of cutting back, and it looks like that's continuing.
Yeah, definitely. Their CapEx has decreased substantially over the past decade, and that's even while production has grown. So that highlights how focused they are on capital efficiency, this shift towards shorter cycle projects.
So they're essentially like getting more bang for their buck with each dollar invested.
Exactly, making every dollar count. And as those big projects like TCO start producing and spending in the Permian levels off, we could see even more opportunities for capex reductions. Of course, they got to balance that with, maintaining their existing assets, investing in new opportunities as they pop up.
So it's finding that sweet spot, right?
Yeah.
Invest enough to keep production going, maybe even grow a bit, but don't overspend and risk jeopardizing their financial stability.
Exactly, a delicate balancing act. And then there's the chemicals market. It's been having kind of a rough time lately.
Yeah, what's their take on that? Are they concerned?
Actually, they seem somewhat optimistic. They highlighted that polyethylene chain margins have actually strengthened this year, and they believe in the long-term fundamentals of the chemical market. They have some projects set to come online later this decade, and they think they'll benefit from an improving market. So
they're not running away from chemicals despite the challenges?
no, they sit as a core part of their portfolio, and they're getting ready for that anticipated growth and demand, planning ahead.
Okay, so it sounds like we've touched on a lot. Operations, financial strategy, their outlook on different markets. Pretty comprehensive.
We have. But I do want to kind of zoom in on one specific area before we broaden things out to, the wider energy landscape. Chevron's approach to renewables, the whole energy transition thing.
Right, they didn't talk about it much on the call, but it's a big deal, right? I mean, they're still an oil and gas giant, but they've also been making some moves in those lower carbon businesses.
Absolutely. It's like they're hedging their bets, diversifying, getting ready for a world where, oil and gas demand might not be what it is today. They've been putting money into renewables like solar and wind, and they're exploring other stuff like carbon capture and storage, hydrogen, all that.
So they're acknowledging that the energy transition is happening, taking steps to be a part of it.
Mm-hmm.
Makes sense, considering all the pressure they're getting from investors and society as a whole to address climate change.
Yeah, for sure. And they're not just talking the talk. They're actually putting money behind it, making real investments. We're seeing this across the whole energy industry. These companies are realizing that shift to a lower carbon economy is coming, ready or not, and they need to adapt if they want to stay in the game.
It's not just about pumping more oil and gas anymore. It's about evolving with the times.
Exactly. And that takes long-term thinking, strategic investments, being willing to embrace those new technologies and business models. Chevron's approach to this is definitely something to watch closely over the next few years.
It's like they're playing 3D chess with their portfolio, thinking way ahead.
Yeah, exactly. And, it's not just about slapping some solar panels on an oil rig and calling it a day. It's about taking all that expertise they have, the infrastructure, all those resources, and using it to adapt, to really thrive in this new energy world that's emerging.
So is that maybe why they're so focused on maximizing free cash flow? Like they're building up this war chest so they can invest in those lower carbon businesses down the road.
It's definitely possible. That financial flexibility, it gives them options, right? They can pursue those opportunities in carbon capture, hydrogen, all that, without having to, sacrifice shareholder returns.
That's interesting. And it kind of leads to a bigger question, right? What does Chevron's performance tell us about the energy industry as a whole? Because they're often seen as a bellwether, kind of setting the tone for everyone else.
Yeah, I think their results do offer some clues. For one, we're seeing this continued emphasis on capital discipline, shareholder returns. It's happening across the board.
Like the days of just pumping as much oil and gas as possible, that's fading away. Now it's about profits, efficiency, making those dollars count.
Right. Investors want to see that return on their investment. So energy companies are responding, focusing on generating that free cash flow, giving it back to shareholders through dividends, buybacks, all that.
And we're also seeing this focus on operational excellence. Remember Chevron's awesome turnaround performance. Is that something we're seeing elsewhere too?
Definitely. In a market where commodity prices are all over the place, controlling costs, maximizing efficiency, that's key. Companies are embracing technology, streamlining their processes, adopting best practices, doing everything they can to get the most out of their operations.
So it's not just about quantity anymore. It's about doing it smarter, being more strategic.
Exactly. And we can't forget about the global landscape, geopolitics, all that. Energy security is a huge concern now for a lot of countries. That creates challenges, but also opportunities for energy companies.
So how is Chevron positioned to handle all that, those geopolitical complexities?
Well, they have a global reach, years of experience operating in tough environments. Their diverse portfolio, the relationships they've built with governments that focus on long-term contracts, it helps to kind of buffer them against some of those geopolitical risks.
So they're not invincible, obviously, but they're maybe better prepared than some to navigate those choppy waters.
That's a good way to put it. And, they're not just sitting back and reacting either. Chevron's been actively involved in discussions around energy policy, pushing for solutions that address both energy security and climate change.
That's like they're trying to walk this tightrope,
Right?
meeting today's energy needs while also looking ahead to that lower carbon future.
Yeah, finding that balance is tricky. But in the end, their long-term success depends on how well they handle that transition.
Well, I think that about wraps up our deep dive into Chevron's Q3 2024 earnings. We've covered a ton of ground, from their current performance to their plans for the future, their strategy, their challenges, all of it.
Yeah, hopefully this has given everyone a good overview of where Chevron stands, what trends are shaping their path forward.
And as always, do your own research, draw your own conclusions. The energy landscape is constantly shifting. Staying informed is more important than ever.
Absolutely. Thanks for joining us on this deep dive into Chevron's earnings. Until next time, stay curious and keep exploring that fascinating world of energy.